Well, hello everyone. My name is Roger Scott. I'm the head trader for Wealth Press. Today is actually May 28th, and as I always say, let's get into it right now. I want to start off with the broad global market news, the world news that happens in the morning, so you guys are prepared for the day. But then I want to talk about some major reports that came out literally a few minutes ago, and I mean just a few minutes ago. So we're going to get on top of all of it right now. So global markets were mostly higher Thursday as investors pinned their hopes on an economic rebound from the COVID-19 pandemic. Investors prepared latest weekly report of U.S. jobless claims. Shares rose in Paris, London, and Tokyo, but dropped in Hong Kong, where tensions are flaring over Beijing's effort to exert more control over the former British colony. And I'll have the jobless claims for you in just a minute. New report in the U.S. is expected, and that's what we're going to be talking about, to show millions more likely filed for unemployment benefits last week after nearly 39 million sought aid in the previous 9 weeks as the coronavirus paralyzed the economy. The pace of layoffs has declined. Well, we're going to see if that's still the case. For 7 straight weeks, a sign that a cratering of the job market may have bottomed out. By historic standards, though, the numbers of weekly applications remain enormous, and that's probably an understatement. The two pro-democracy lawmakers were ejected from Hong Kong's legislative chambers Thursday morning at the start of the second day of debate on a contentious bill that would criminalize insulting or abusing the Chinese national anthem. Wednesday, U.S. Secretary of State Mike Pompeo told Congress the Trump administration no longer, I repeat, no longer regards Hong Kong as autonomous from mainland China. That sets the stage for the U.S. to withdraw preferred trade financial status Hong Kong has held since it reverted to China 23 years ago. South Korea edged 0.1% lower after health authorities reported 79 new cases of coronavirus. The Bank of Korea said the economic conditions may shrink for the first time in 22 years. That's interesting. Its rate cut followed another 2 months ago, which was the first since 2008. No surprise there. So now let's talk about reports. First report that came out today was the durable goods report. Consensus was down 18.2%. We're down negative 0.172%. A little better than expected, but I mean, look at these consensus. When you have a consensus that's down anywhere from 8% to 28%, that's just telling you that the market has no idea what to expect. And while 17.2% is better than expected, it's bad. It's really, really, really bad. So let's now move on to the jobless claims. Ooh, not good. Well, better than the moving average. Moving average is about 3 million. Prior is about 2.4 million. Consensus was about 2.1 million. And we're right at 2.123 million. Right in line with consensus. Not the best number at all. Not even close. But it looks like it's not increasing. And that's the case. That's the biggest case. Again, the numbers are some of the worst numbers we've ever seen in history. But they're not as bad as the 4-week average. The 4-week average is worse by almost a million. So again, it's looking a little bit better. But again, when the consensus is down 1.8 million to 2.1 million, that's just very, very, very bad. Now the GDP, let's see if the GDP came out. Remember, we were riding high at 2.1% for about a year and a half, 2 years. And the actual number is -5. Look at this. Consensus is down 4.8%. Prior number was 4.8%. Consensus 5.2 to 4.5, -5%. Not good at all. Very, 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 very bad. That's probably one of the worst contractions we've ever seen. Remember, the target goal was 2.1%, and Trump was reaching it. So these are some disappointing numbers, and I'm expecting the stock market. Let's see how the futures are looking. They were up a little bit before, and now they're not really doing that well at all. Dow futures were up about 250, 300 points pre-open. Now they're only about 138. So these numbers are not good numbers, and they're disappointing Wall Street. And as I predicted, the NASDAQ is cooling off in comparison to the S&P. Over the last 3 weeks, the tech stocks and the large cap The large cap tech stocks were very, very strong, but it looks like we're starting to see a selling pressure. Now let's go to my filters. We look at the top 10 sectors, and I'm expecting a minor change. Right now, we're still seeing technology and consumer discretionary lead. I wouldn't doubt to see healthcare go up to the first place. We're going to see a little cool off in tech and consumer discretionary. And I think that's going to be the biggest surprise for this week. We're going to see technology cool off. Let me explain to you why. What you're looking at right now, this is the NASDAQ 100. And as you could see here, it almost went all the way to new highs. This is old-time highs, and this is where we're at recently. The S&P is barely over here at the 200-day moving average. Now, notice about a week ago, I told you that we were seeing upside on the trend, but we were seeing a downside pressure on momentum levels, which is exactly what happened right here. Higher price, weakness on momentum. Higher highs on price, lower highs on momentum. Higher price, lower price on momentum. Now, I've pointed this out about 4 days ago, and it looks to me now that the NASDAQ is cooling off, especially in comparison to the broad market. And I'm not blaming it, especially with this divergence and the RSI. So there's a good chance we're going to see a cool off in tech and consumer discretionary and a heat up in healthcare and other sectors. The tech is just a little overheated right now, and I think this is going to be a good reversal. So the biggest surprise for the week is these three reports. But I'm also seeing technology cool off for the next few weeks, maybe even longer, maybe hit the 50-day moving average. But again, technology is bullish. The broad market, the blue chips right now are still kind of trickling at the 50-day moving average. But again, folks, GDP at -5%. Remember, we were up 2.1% less than 3 months ago, and we're now -5%. We're worse than the consensus. Jobless claims, we're below consensus. Let's see here. Durable goods, we're a little better than consensus, but still really, really bad. The bottom line is, folks, things are not getting better anytime soon. Things are not getting worse, but they're not getting better, and it may take some time for things to get better. But for right now, it's a good time to take profit on your tech and consumer discretionary positions and rotate out of those sectors. So the biggest surprise this week is we're seeing a downside. We're seeing some softness come into the technology sector and consumer discretionary sector, and that's something we haven't seen in about 6-7 weeks. Ever since the correction, tech has been outperforming everything. And finally, for the first time in weeks, we're finally seeing a cool off. But it's not a broad market cool off. We're seeing strength now in the blue chips as opposed to the technology sector. So you're going to see a redistribution of funds moving away from tech and more into blue chips, energy stocks, healthcare stocks, utility stocks, which is actually not a bad thing. It's not good for gains or growth to be concentrated in a specific sector. It's much better when we have a broad market that's doing better than than two sectors, because then you have more broad stocks doing better, and that increases the odds that the S&P will in fact break through and actually stay above the 200-day moving average. What do I always say? We need 2 days of clearance. We haven't had it yet, folks. Now, we've closed above the 200-day moving average. Notice both days, price action tore into the 200-day moving average. I want to see 2 complete days of clearance when nothing is touching the moving average, and then I'll call a bull market again. Till then, while we're still having trade action touch the 200-day moving average, that doesn't give me clearance. 2 days either above without touching the moving average, or 2 days below without touching the moving average. Trust me, I've tested this hundreds of times. Use that as a filter for whether price is above or below the moving average, because otherwise it could stick to that level for quite some time, and I'd rather get into it when it's moving and as opposed to just sticking around the moving average. If you look back, you'll notice that price likes to gravitate towards the averages and just kind of hunker there for a while, and we don't want that. We don't want to be in stocks that are not, or in indexes or in price that's not moving. We want to be in something that's constantly on the move. And right now, tech is not moving up, but blue chips are starting to see some upside. Now, Folks, I got to tell you something. I'm tired of watching my subscribers get crushed by this economy. I'm really sick of it. I've had it. And I figured out a way for you to cash in big on my latest post-pandemic moneymaker. Today, I'm giving away my number one. That's right, my number one fast cash stock that's primed to soar soon. And when I say soon, they usually see big gains in 10 days or less. That's right, 10 days or less, 10 trading sessions or less. So don't miss out on your chance of cashing in on thousands. And I mean thousands, not hundreds, thousands. Change your life. Do something good for yourself. Markets are at prime opportunity mode right now. Look at this. We're sitting at the 200-day moving average. Could there be a better time to get into the market? Be smart. Get in and get the name of my number one fast cash stock today. You get the potential to make $3,680. Some of my subscribers have seen quadruple, 7-time gains, 700% returns. You don't want to miss out. You really don't want to miss out. And it's happening today, 1 p.m. Eastern Time. Do not miss out. Click the link below or the button at the end of this video. Get in on this. Get in on this. Stop regretting. No more regrets. Get in on it. This is the time to make money right now. You don't want to miss out. Provide for yourself, your family, your loved ones, your friends. Do something good for yourself. Follow the link below or the button at the end of this video. Get in on this now. I'll talk to you guys soon. Take care.